Hello everybody. In this video I'm going to be doing a brief stock analysis on Walgreens or Walgreens Boots Alliance, and this is not necessarily going to be a deep dive into their financials, but more so me just giving my general outlook on the company as well as talking about the overall industry. And I'm also doing a video on all of the companies in the Dow 30, so come and check that playlist out on my channel if you are interested. And without further ado, let me get right into it. Here, taking a look at their 5-year chart on Yahoo Finance, I can see that 5 years ago they were trading at just under $100 at $95.75, and then now they're trading at $41.42, with them recently being as low as $36.65. So I'm going to go right off the bat here and say that their stock price, or the company, is in a little bit of trouble, and they're currently at about a 4% dividend, which in my opinion is not really worth it for the declining stock price. And then now I'm taking a look at their revenue and earnings. Extremely steady revenue for the last 4 quarters, with a little bit of a dip in earnings for quarter 2 of 2020, which is expected for having so many retail locations and just being able to operate their pharmacies. Now I wanted to switch over to talking about CVS for a second. CVS has actually half the number of stores as Walgreens, which I found a little bit surprising. CVS just has 4,600 stores, whereas Walgreens has about 9,500, I believe it was. Now, CVS has not seen the decline for their stock price in the 5 years that Walgreens has, down to $65 from $110. Now, what I wanted to talk about here is that I do not believe both companies will survive long term. For those of you that do not know, Walgreens acquired Rite Aid in like a $5.2 billion merger in 2017, which was really needed for Rite Aid. Rite Aid was a couple of years away from bankruptcy at the most, and Walgreens needed to increase their reach, which they were able to do with the merger. Now, while Walgreens and CVS are both doing okay right now, their financial statements look fine. I think longer term they are both in trouble, and there will need to be another merger between these two companies, or one of them will end up going bankrupt. And I'm not even really talking about here in the next couple of years, because I think both companies will be fine. I'm talking about probably more than 5 years from now. One of them will be facing bankruptcy. And now going back to Walgreens, I just wanted to comment on a couple of things here. I kind of already mentioned this, but their dividend yield is 4.42, which is somewhat high, but it does not justify the decrease in their stock price for me. So really not a strong bear for this stock. And then their market cap is actually only $36 billion right now, whereas CVS is at $85 billion. And Walgreens is in the Dow 30 with a much smaller market cap, so I'm not actually sure how that worked out there. And I also wanted to take a look at a couple of points by the bears at Morningstar for Walgreens. The first one here is healthcare reform and recent controversy with pricing transparency will likely increase stock volatility. And by volatility, they mean stock decreases really for Walgreens, and could pose as a fundamental threat, which I completely agree with. And then also the firm has faced increasing pricing competition from mass merchants and internet retailers for consumer commodity products. And that's also a really fair point. What is Walgreens, or even really CVS, really going to do to compete against these mass merchants and internet retailers, which are usually a lot more cost competitive and also a lot of the time much more easily accessible? And most of the time I will look at the points from the bulls and the bears, but to be honest, I looked at the points from the bulls on Morningstar, and I really don't know if I really agreed with them. I really don't see any path forward for Walgreens really long term, to where they're really going to be successful without CVS and Walgreens being merged. I would love to hear down in the comments if you disagree and why, but for me, I really do not see a positive outlook here. And lastly, I wanted to go over their research report overview on the Robinhood app, and it's 4 out of 5 stars, which I don't know if I necessarily agree with, but they do have a narrow economic moat because their outreach to the U.S. Stores allow them to access about 80% of the U.S. population, which is really, really great and helps their brand. And then the stock price has a fair value of $48, which is fine. The stock's currently at $41, as we saw, so it'll probably continue to increase as stores are able to open and increase sales. And then nothing really to report about the uncertainty or stewardship from the research report. Again, go and check out that playlist on my channel for all of the Dow companies if you are interested. Thank you so much for watching, and subscribe for more content.